whether or not we'll be able to, how do we see when the bear season comes? And I covered that, I think, right before that question was asked. I went back to 2018 on Bitcoin and showed you guys how we stacked a resistance on a high time frame. Well, actually, we didn't stack it. We created one, a strong one that reacted very strongly to it. And then later on, we stacked other resistances even lower. So that's what we're looking for to define bear season. We're not there yet. So I'm not going to say we're in bear season yet. We're too early on to the breakout. The all-time high breakouts typically do bull seasons for quite a bit. So it's going to be a while probably. I'm not saying we can't have a scare and then run again, but it's probably going to be a while. If you look at the volume, we accumulated a lot there, and this is very thin still. So the people that accumulated here are not going to be able to distribute here. And all they can do is create support and run again. Create support and then run again. And then people will line up to buy here. Then they can crash through all that liquidity, and that could be the bear season, trapping that money. But until people line up to buy, the powers that be that bought all of that, they're not going to be able to get all the way out. And if they don't exit, then they're going to keep supporting the price. And so long as they keep supporting the price, bear season won't happen. If you go to like Bitstamp, you can see the increasing volume leading up to the last all-time high. See? And then remember, this was the exit, and they pumped it one more time. And then that was basically the trap. And then we came down to that support zone and rallied again. So even if this is the exit, we'll probably, dip and then run one more time. Or this is the exit and that's the dip, in which case we'll create a massive head and shoulders there and then break down. But until then, we're nowhere near done with bull season. I hope that nobody asked a question that I didn't see in the chat. I don't remember if that was the final question or not. I think it was. But feel free to retype it or use your words with your voice. What's the next question you guys have? Yeah, don't worry about it, Dennis. Another thing we can look for is, high volume sell-offs. So this was a high volume sell-off. That's actually very concerning. And if you guys remember back in January, I was very apprehensive, but we played off of that support zone. Actually, in fact, if you guys were present for it, that was a really good call by me. It looked like this, and I defined that support. I defined that resistance zone right there, and we had already used this zone right here, and so I told you guys to short this shit. But I did have you guys take profits earlier right there, so we did short it for several days. It was nice. It was a couple days, 3 or 4 days, and it did end up going down to even lower lows, which makes sense because on the higher time frame, this zone was already used. That's not a zone, so we did go to new lows. But I was also anticipating below 28, so I was wrong there. But that's just me being conservative because I don't want to steer you guys off a cliff. I didn't say it had to happen, just that it should, and it could have, and it still can. But yeah, so that was a really good short setup based off of the resistance that I spotted and the way we were diverging to it. The same thing can happen up here. This is a resistance zone right here. So if we come up to that and then resist it, that's a great short setup. And none of this in comparison is support. So we could take profits here, or we might even be able to take profits down here, or even at new lows. Not saying it's going to happen. For all we know, we'll play off of that. But either way, this will be a good short setup for a little bit if we resist that zone that caused that whole crash. That was a massive fall. We fell from 56 down to 47 in a quarter of a day. It can happen even harder. Where there's confident selling once, there can be confident selling even more at that level or higher. So we could theoretically go all the way back up to new highs and then crash even harder. I'm not saying it's going to happen, but we could. Let's keep that in mind. Volume profile wise, from the Musk pump, this is bearish up here, and so is that. And the buy volume is almost not as strong as the sell volume. It's a little stronger. You know, this is kind of bullish in relation to the last node, but if you look at it overall, that's bearish. This is bearish. This whole thing is bearish. It's not really bullish till below that. And a little bit of bullishness there and a little gap there, which I've been calling out to you guys as a good buy zone. But other than that, this is, you know, thinning volume. In the grand scheme of things, it's very thin. Wow, Bitstamp has more volume than Binance does up here. That's interesting. Oh, maybe not. I thought it might. I guess not. I guess it's the futures that have less volume. Oh, yeah. But that makes sense because they're not buying the hold, so they're a little bit more apprehensive. But yep. Okay. Next question. No more questions have been typed. We have 6 people in here. Someone can think of a single question. Someone that hasn't asked a question yet, ideally, so I can help you. No question's a bad question, and I don't mind repeating myself during normal work hours. So if you have a question that you know I've already answered, but you don't fully understand, I am happy to repeat myself. And maybe even reword it for you so you can better understand it this time. How could we use the OBV indicator? Hey, Rock, have you seen the OBV indicator video that I made? Just checking before I go on about the OBV. Oh, okay, cool. If you have troubles finding it, let me know. I'll still cover it first. I'll cover it for a second, but I made a pretty thorough video on it. So the go on.
I'd be really interested to know your process. Just when you look at a chart for the first time, I mean, there may not be things you feel you can share in terms of support and resistance zones, but just literally just looking at a chart and how you might sort of start to think about formulating a signal. I just to get a sense of your process would be really helpful, because there's a lot of great information that you give us, but I think tying it all together is the key thing that I think I haven't really kind of got, but I don't know how much of that you can share.
Okay, yeah, I'll cover that too. That's a good question. So for the on-balance volume, I know the video thoroughly covers it already, and you guys can find that in the general chat and classroom, I believe. But the on-balance volume is a reflection of money in the asset based on limit orders. It's my understanding of it. I could be wrong. I've always known it as a smart money indicator. So as the OBV goes up, that's smart money going into the asset. And as the OBV goes down, that's smart money leaving the asset. Rule of thumb with it is the higher the OBV goes, the higher the price should go. The lower the OBV goes, the lower the price should go. If you were to look at the S&P 500, this isn't very related, but if you were to look at the S&P 500, since 2009, it was doing this. And then right before the Corona panic, we started diverging. It was really weird, just the OBV. And then we kind of went up a little and we still kept going down. And then March happened and the stock crashed and then the OBV poured out. So it's almost as if people knew that the smart money knew that the coronavirus was going to happen. Really creepy. But anyway, so yeah, they were slowly exiting before the pandemic. It's really interesting. And the price, let me change the color. The price was bullish the whole time. Even here, it was still bullish. But then the corona panic happened and the price corrected with the OBV. So if you see the OBV going down and the price is still going up, you should be careful. And if you see the OBV going up and the price is going down, you should get more bullish. Because if the price is going down, but the OBV is going up, then smart money is getting filled on their limit buys. But yeah, if you want more info on the OBV, you can watch the OBV video. Yeah, it's a leading indicator. I love leading indicators. And then the next question, which is another good question, is my process. And this, you're right, it's a little bit privileged information for primary tier, but I can still give you some really good info. In this process that I'm about to teach you, most professionals use, and any kind of experienced trader also uses, is you want to start on a high time frame. The higher, the better. So for Bitcoin, I'm going to go to Bitstamp. Oh, that's not Bitstamp. Here's the monthly for Bitstamp. Log scale undwarfs it. So you start at the highest time frame and identify the sentiment. So when it looks like this, what's the sentiment? Bullish. What about that? Still bullish. What about that? Still bullish. This, still bullish. Bullish. So from start to finish on the monthly time frame, since its inception, on Bitstamp anyway, it's been bullish. And the greater time frame always, and I say always, until the trend breaks, will prevail. So the prevailing wind condition is up for Bitcoin on the monthly. And you could draw a sentiment gauging trend line. Maybe it was here and it broke temporarily, or maybe it's here, and it just depends on where you're looking at. But either way, the trend's up on the monthly. So your monthly bias for Bitcoin is up. So if you're trading, if you're looking at the monthly and the monthly says it's going up, then you go down one to say the weekly. And if the weekly is also saying it's just going up, then you have a weekly bias that is up. So now we know that the month is up. The month is going up and the weekly is going up. So we know that the monthly traders and the weekly traders are very bullish on Bitcoin. And until the weekly time frame breaks down, the monthly time frame won't break down. Because remember, the higher the time frame, the stronger the sentiment. So yeah, so the monthly is going to stay intact. The monthly bullish bias will stay intact until the weekly bullish bias stops being intact. And we can see that it's respecting the zone still on the weekly. And so the next one, you go down to the daily. Look at the daily. Zooming out all the way, looks like the daily is only going up too. We have some sideways motions, but overall it always catches a higher low. So we have the monthly, the weekly, and the daily all saying Bitcoin should go up. And remember, the higher the time frame, the more reliable the sentiment is. So on the daily, the weekly, and the monthly, we're bullish. Up on the 6 hour. And that's where it starts to kind of fake people out. If you look long term anyway, we were going up for a while, but when we have bear season, we do break down temporarily. So for example, here we rejected it, went down. Everybody thought it was downtrending, went sideways. Everybody thought it was going up, then crashed, went sideways. And then finally it ran again, crashed, went sideways, broke down, went up a little bit, crashed, went sideways. So the 6 hour is where it starts to get screwy. But if you're trading above the 6 hour, the sentiment is very clear. So if you're a daily time frame trader, weekly time frame trader, monthly time frame trader, the direction is up. So you want to be looking for buys. You want to look the long if you are on those higher time frames. And remember, the higher time frames are dominant. So whatever the high time frame says is likely what's the bigger picture is going to happen on the smaller time frames. So here the 6 hours scaring the shit out of people, but the daily was fine, the weekly was fine, the monthly was fine. So you knew that these lows are actually going to be bullish. There's going to be opportunities to buy. If the weekly is going up, the monthly is going up, the daily is going up, then you can buy the dips on the 6 hour until the higher time frame breaks its trend. Obviously, if we go down to a smaller time frame, there's going to be even more screwy action and even more FUD and FOMO and fear and doubt and all that stuff. It's, the lower time frame is going to have all that noise, or it tricks people out. But if all the time frames are aligning, then you can trust that move. And so when I'm looking for signals, I'm looking for all the time frames to align. So if I can see that it's bullish on the monthly, the weekly, and the daily, then I'm looking for a good buy opportunity on the 6 hour. And that's how I give you guys those gold signals. I find higher lows on the 6 hour and I signal it out to you guys. It's not rocket science, but that's what it comes down to. You're anticipating the higher time frames holding true, and that the lower time frames are just good opportunities. When you have a new trend inside the 6 hour, for example, this is a breakout, we can just analyze just this. The 6 hour is saying it's only going up. So we can go down to a lower time frame. First, let's look at this. This is 2013 in January, April 2013. Wait, did I just, yeah, okay, January 13 to April 13. We go down to, it's probably not even gonna show up when I go down to the hourly. Yeah, it's not gonna, it's too far away. I can try. Let's see what happens. Yeah, the last one we get is 2018. But yeah, so now we'll just use this for an example. So on the hourly time frame for this, it's fully intact. It gets a higher low, higher high, higher low, higher low, higher high. So at this point, the bullish bias is here for the hourly, which means you can go down to the 15-minute and look for good buy opportunities. Actually, maybe not, because this does break down there. But generally speaking, it's one direction up. You can go down to another time frame. So during this period, you could actually find good opportunities on the 15-minute. It's only for a month or two, but not even a month, for 1 month. You can find buy opportunities. But yeah, so since the monthly is bullish and the weekly is bullish and the daily is bullish, we get to go to the 6 hour and find signals to give you guys. And so that's what I'm looking at right now, is I'm looking at the white noise of the daily and the weekly and the monthly. And so that's what this is. So the daily, weekly, and monthly is all pointing towards up. So we do have that edge that we think it's going to go up. But until then, we have to kind of think of these moves as one move and just faking people out. And this is one move faking people out. And one move, we don't know where it's going to stop, but we do know the lower it goes, the better opportunity it's going to be to long, based on the higher time frames telling us so. So in this case, even the daily is kind of screwy. But overall, it's still catching higher highs and higher lows since March. And so, at least since March, the daily's been pretty damn reliable, other than, a little bit of screwiness here. Still, technically, hasn't daily traders haven't been screwed over here yet. It could be by Monday or Tuesday. But for now, the last screwy spot on this whole stretch from March to March is just right here. And it makes sense because this was the all-time high and we doubled past it and we hit 40K. That's 100% returns with no leverage. So it makes sense that there was some profit taking there. And we overall had a really shallow retrace. Let me throw on the fib. Now, overall, we barely even got off the blue zone. Very similar to this. So, yeah, still very bullish. And we're still very bullish, bounced off the blue again. Overall, since March, we haven't broken down below the blue. So theoretically, we could come down again and then rally, take that out, and then come up again. Very similar to what happened here. Take it out, come up again. But yeah, so that's how I get my biases, and I'm able to confidently signal to you guys is the higher time frames say we're going up. So I look for good opportunities on the smaller time frame. Most people don't have the patience to wait for good opportunities on the 6 hour. But I call them out because when they happen, they're really good. Sometimes you never even get those entries, but when it does happen, they're really good. And when I'm calling out 200 different good entries on any given day or any given week, there might be a couple that hit, and that's all we need. We only need a couple 20, 40, 50, 60, 80% runs a week, and we all get rich. So, it's okay that, 98% of them don't hit the same week that I signal them, because some of them do. And in a perfectly volatile market, they'll continue to hit. March to basically September was freaking awesome for my group. It was just awesome. Higher lows, higher highs. There was this hedging happening right here on Bitcoin, but on altcoins, let me pull up the altcoin market. They were going back and forth. You had gold signals filling every like 10 days. And I anticipate that happening again, up, down, up, down, up, down. It was so fucking great. So much money was to be made. While Bitcoin was figuring out what it was going to do, but it looked optimistic. I mean, some people knew what Bitcoin was going to do, but overall, it just looked optimistic. Nobody was certain. And so when Bitcoin would, want to drop, but not, it would temporarily cause good entries on a high time frame for alts. Here, I'll pull up the 6 hours so you can see better. Look at that. Big old tops and bottoms over and over again. And then since February, which, a lot of you guys are new, since February, we've just been going up. And this is an Elliott wave. This is a breakout. That's 1, 2, 3, 4, 5. So I'm not going to be like, buy the dip, guys, buy the dip. And look what happens. Not very many gold signals went off here. Some did. And, this is an average of the altcoin market. But, some did go off. But all the real gold signals are waiting in this range or even lower. Remember what I said in the first video today? The low of the bull flag is where all the real support is. So pre-January 10th, that's going to be where all the gold signals start filling. If we can get down to that level, which we can, if we can do it, it will give us great opportunities in the market. But yeah, that's what we're waiting for. I'm not going to signal to buy the many dips on the top of an Elliott wave. I signaled some where, enough factors presented themselves, and that was Valentine's Day was this crash right here. Oh, I forgot about the February 20th crash. When I told you guys about the Valentine's Day being the last time. Looks like altcoins got slaughtered at the end of February. I completely forgot about that. But anyway, yeah, so I'm not aggressively signaling gold when we're overextended. But if we can get into these chop zones where we're still bullish, but we're getting new highs and new lows, it's really good for good entries on select altcoins. And you can see, yeah, every 3 days, almost, gold signals are filling for us for a little bit. But December was a lull period for sure, because Bitcoin was a new all-time high. Everybody was wondering if we were going to drop. But that's actually the indecision is what causes the volatility. When everybody knows we're going up, that's not indecision. It's just overextension. So yeah, you can buy stuff and make money, and you can sell stuff and make money, but it's about all those extra factors working in our favor. And so what we really want is the up and down bullshit that most people don't have the stomach for. That's how our gold signals are going to be made and filled on a regular basis. And we're starting that right now. After that dump, we've been going up and down real nicely, and it could get even better. Ideally, we would get higher highs, higher lows, and still come back down. This is ideal for gold signals. What's not ideal for gold signals is new lows, new highs, new lows, because eventually it could just fucking dump really hard. And then these gold signals that I gave you guys, eventually you're going to take small losses on them. And that's not going to make me look good, and it's not going to make your portfolio look good. But yeah, if we can stay bullish and still have those big swings, that's where all of our trade setups are going to come into play. Until then, a lot of the signals I've made are in this range from December to January. And then again, the start of February, we broke out again. So this base, the beginning of February, is going to be really strong support for us. And I've been saying that. If you go back and look at all the gold signals, I did a bunch of them around this time to hopefully fill us in this level. We're not there yet. A couple of them filled, but not most of them. And if we go up again and break out again, then I can signal this area and even have some aggressive signals in this area. But until that flag plays out, I have to anticipate that the market can come back down to the pre-consolidation, or at least the consolidation level. And so my aggressive gold signals are right here, and people still give me shit every day. These signals aren't failing. Yeah, well, nobody said trading was fun every day. It's not really supposed to be fun ever, but it's hard not to get happy when you're making money. But yeah, so that, yeah, we're waiting for the market to be predictably volatile in combination with supporting our long-term biases. That's that's the beginning of my process, is I'm looking for long-term bias to stay intact and volatility to be trending. And then if the long-term bias is still intact on the smaller time frame that allows me to signal, and we have that volatility required to trade it, we don't want to trade the hedge up that's waiting to dump, but we want to trade that back and forth that's in a trend. Bitcoin is going back and forth, but it's not really in a trend yet. It was here, back and forth trend, back and forth trend, back and forth trend. But here, we're going back and forth, but we're not trending yet. So we're just gonna have to wait a little bit longer before we get aggressive with the signals again on Bitcoin. So if we can get this and get up to new highs, then our back and forth is trending, and it'll be really good for Bitcoin trades. Until then, that's what we're waiting for. But yeah, so that's how I find my trades, and I could go a step further and mention the volume again. We want there to be volume where we're trading. If there's not, like here, I'll pull it algo, hide everything, get rid of the fib. Let me move to here. Yeah, so see, there's a lot of volume down here, less volume up here. So as we get to less volume, I have to be less aggressive signaling you guys to buy algo. BNB, that's some thin volume. So I wasn't making a lot of buy BNB calls, even though it ran again. It's thin volume, so it's more and more dangerous and less predictable. What's another coin? SXP. At least this has some nice chunks of volume on it. But even that's being screwy lately. What's another coin? ETH. No, it has some nice chunks of volume on it. I'm picking up all these good coins. What's a high volume coin that isn't really high volume? Theta. Let's check Theta out. Yeah, here we go. So in comparison to the base, it had a lot of volume, thin, a lot of volume, thin. So until we get back down into those high volume areas, it's gonna get more and more risky. T-Fuel too, probably. Yeah, see, thin volume. So yeah, these setups might hold true and be profitable, but they're going to be less and less gold tier worthy signals, the less volume we have. So that would be the third component to what I look for in finding setups and trading and whatnot, to further answer your question. So to recap, we need higher time frame staying intact. We need volatility to be trending, and we need volume to support those patterns. If we have those three things, trading becomes very predictable for us. And then you're just, at that point, you're just looking for risk management to come into play, where you're risking way less than you stand to make. This is a really good question. Does that give you some insight, whoever asked that?
It does. Thanks, Blair.
All right, cool. We could go further and we combine the OBDV, see if it's still going up. What other indicators do I rely on? If it's a long opportunity, we want to see that the acceleration downwards is done and it's begun deceleration downwards, or maybe even begun acceleration upwards. You know, if it's an uptrend, we want to see that it's at the bottom of the Bollinger Bands. We want to see that the cumulative indexes are going up still if we're trying to buy it. Fibonacci comes into play. We want to make sure that these dips are very shallow. That implies that the people that sold the bottom aren't getting a chance to buy at a fair value, which forces them to FOMO, which forces the price to go faster up. The cloud, some people use that. That's if it's near the cloud, it's going to be safer, but that has a lot to do with volume. That's about it, I guess. CCI is also pretty handy for Forex pairs. Basically shows you supply and demand pushes. You want to buy the push downs of the CCI and sell the push ups of the CCI. But yeah, so I'm just racking my brain, trying to use as many edges as I can and find the ones that align with each other, and basically a confluence of indicators and timeframes to signal for you guys. And then it's simply using risk management where we're risking way less than we stand to make. And then I signal it to you guys. And that's also how I trade. I trade basically just how I signal, except for typically my signals are more profitable than my trading because I overtrade and I'm trading smaller time frames that are less reliable. But yep. What's another question? Oh, cool. Does somebody else have a question for me? All right, so I've answered everybody's questions and I can get off of here, sounds like.
Thanks, Beluga.
Who was the guy that had a whole list of questions that was going to give someone else an opportunity? If you have more questions. Oh,
Yeah,
nice,
that
Dennis.
was me, but you actually already answered them, so I'm all out of questions.
Cool. We can go ahead and cover risk management since some of you guys maybe aren't so familiar. I use my eyeballs, but there's a long position to short position calculator here, and you can just click into it and adjust your risk. And then if the risk reward ratio is 3 or better, then it's probably worth the trade if you have enough indicators supporting that bias. So here's a 3 to 1. You can just drag this around. So if we can get down to that level or this level, and then I take profits of the old consolidation, that would be a decent setup. Or, you know, maybe even lower. Maybe we're trading in this, and we're going to buy in that zone, and we're going to take profits at new all-time high. Obviously, that's going to be a good enough risk-reward ratio. And the opposite applies to shorting. Say we want to short new highs, and we want to take profits at the old dip. That's not a good enough risk-reward ratio. But let's say that it gets to new highs, and we only average in that, then it becomes a good enough risk-reward ratio. So the smaller the area you're entering the trade, and the greater the area to profit target, number one, will determine your risk-reward ratio. So on those coins where I have a 10% buy range, obviously the target's going to be 30% away or greater, because you're risking 10% to make at least 30%. And in those situations where there's a 20% buy range, it's to make 60% or more. I might give you a conservative target that's not 3 times the risk, but that's just to make sure that you guys are reducing weight where the resistance is coming into play. For example, me, just because I'm making a 1 to 3 risk reward ratio trade, doesn't mean I'm going to hold the majority up until the full reward. A professional sees the potential, but reduces risk the closer it gets towards their target. They reduce their size by reducing their risk. They reduce the risk by reducing their size. A lot of people, like if this is a short and you entered here with intentions to take profits here, if the price comes down and starts to slow down right here, that's pretty close to your target. You're still making way more than you risked. You can go ahead and take off half here if it wants to reverse. And then if it comes back down and then comes back up again and gets to new highs, take another half off. You know, you still made more than you risked. And the same thing applies to the long position. You know, if you're buying something, here with intent to take profits at new all-time high. When the price fills you down here and you take that risk and the price reacts, oh, and now we're slowing down and we want to go down, take half off. And then sure, it might come back up and then slow down again and want to come down, take another half off. And eventually it comes back up and slow down, take another half off, and then it'll probably correct down to here. And you know, you might want to sell more there or not. I don't know. At that point, you don't have much on it anyway, and you can just keep your original stop loss down there. But risk management in combination with reliable technical analysis is all anyone needs to stay profitable. Most professionals are not waiting till their full target to take majority profits. If you want high success rate, you're going to be taking profits 70, 80% towards your target. Some people just go half. They have, you know, they have a 100% target. They'll be taking half off at 50%. If you're trying to buy here and you're trying to sell here, you're reducing size in the middle. That's how you're always going to walk away a winner, and you're going to keep consistently growing your account. You're not waiting for the moon every trade. You just buy when the risk reward's worth it, and you reduce weight when it's in the middle and wants to reverse, reduce weight when it actually reverses, and then with a tiny, tiny portion, you hold to the stop loss area to break even. And that's how I can gain every single day, is because, yeah, the targets are way up here. Yeah, it can keep going, but we don't know it will. So once we get to the halfway point, remember, price lingers in between support and resistance. That's a good time to take your funds off and put them on something else that's still at a good entry down here. And then the same thing applies. If the target's way up there, once you get to the halfway point and start to linger, shed weight. Use that money elsewhere where it's an even better risk reward ratio still. Because if it's in the middle, that's a 1-to-1. You're risking 1 to make 1. And other people are going to see that and, oh, that's risky, that's a gamble, I'm not going to buy it. So that's why price lingers in the middle. It's too close to support and too close to resistance. It's not a good trade setup. So the price lingers. And so that's one really good reason to go ahead and take profits early, is once it gets in between two zones, it's probably going to slow down. It doesn't have to, but you know, the odds are that it might. There's a 50% chance at least that it'll start lingering for a while and maybe even try to distribute and then fail to distribute, go up and then reject and break down again. You don't want to be there for that chop. So if you're trading with 10K and you put 1K on one trade and your target is way up here, take 500 off right there. And then when it wants to break down, take another 250 off. And then let the other one ride to new highs, and wants to break down again, take off 125. Keep shedding weight and use that money elsewhere where it's still a really good risk reward ratio. I have 1 minute left on this session. I think this is going to conclude